Hey everyone, the market spiked up into the big 570 level on the SPY this afternoon, right after the FOMC. This 570 level is right at the bottom end of our dealer cluster zone. And this is a pretty big area where option dealers are concentrated in. And so this is classic gamma exposure behavior as we get anywhere near this dealer cluster zone to see a little bit of a rejection as dealers are selling underlying shares of the security when they're in positive gamma exposure environments. You can see this quick little sell-off here brought us right back into the zero gamma level, which is the blue line. And so I think overall today, traders were happy with the Fed's 50 basis point rate cuts, but ultimately there was a lot of selling pressure overhead, which really took root right away. Sean, what were you seeing happening with volatility and the FOMC announcement just in general?
Yeah, thanks, Anthony. I was pretty happy with the way that the levels that we were watching played out today. We had the VIX expiration pre-market this morning, and we had noted that the biggest negative GEX cluster was 17. We had some positive gamma at 19 and 20. And sure enough, we saw the VIX settle at 1780. So that was a fairly logical place for it to close with all that negative gamma rolling off, lots of options expiring worthless.
Yeah, that's right, Sean. I think it's going to be tough to get through this 563 to 565 zone here. These levels are two of our larger positive gamma exposure levels. You can see this has been a resistance zone for quite a while here, going back into really all the way back into July, actually. But you can see all the times that the SPY has tagged these levels and retraced, and it's just kind of stuck in this zone. So it's no surprise that we could see a little bit more chopping around before the market comes to a big decision. If we do make a move back up to the upside, let's say tomorrow or into Friday, this 570 level is the next major level that we're going to be watching for. If the market does fail here, which is a distinct possibility, I think the 550 level all the way down here is our next major level. So some big key levels to watch. Now let's dive into a few of the names that we're watching and looking to add to our portfolio. Sean, what are some of the names you've been looking at recently?
Well, Anthony, we just mentioned Apple yesterday, and sure enough, today it actually put in a nice green candle despite the market's uncertainty, and even reached right up to where we thought it would in this 220 to 222 area. So that was good. What I'm looking at right now is CRM, so Salesforce.com. You can see it's been consolidating after this gap down that happened way back in June, and it retested the whole moving average at around this 251 area. And so far it's held, even though it's not the most bullish look at this exact moment. But if we go over to Gamma, we've kind of barely crawled out of this dealer cluster zone. And once we've been in the dealer cluster zone, I start looking higher. But the fact is we have this dealer cluster zone from the 242 area up to 250. And that opens the door potentially for some sort of a rebound to the between the zero gamma line and this 270 dealer cluster zone.
Yeah, that's definitely a name to watch. Next on my list is CrowdStrike. CrowdStrike has really struggled this summer, coming from lofty levels at around the 400 and above, all the way down to almost 200 here by the end of July, early August. And we've seen some attempt at a rally here, over the last 6 weeks or so. And now that we're back in positive gamma exposure territory, I'm looking at the levels coming up. The 280 and the 300 level have my attention. The 280 level was tagged earlier at the beginning of September. The 300 level has not been seen since earlier in July. This would also fill this first gap here coming up back up to the upside. So I think if CrowdStrike can get any kind of momentum going, this 280 to 300 range looks to be an interesting zone. I want exposure to this, on a low risk, high reward type of play. I'd be looking at maybe something in the October expiration, the 280, 300, call debit spread. You'll have to excuse my chicken scratch, but that's, that 20 points of exposure for, a relatively low cost is something that really interests me, because we know CrowdStrike is a name we've traded multiple times in our Discord community, and this is a name that has really been able to generate some huge gains previously. And I think if it can just get back on its feet, that opportunity could be there into these higher demand levels.
Thanks, Anthony. That'll be an interesting one to watch. I wanted to look at EEM now, so the emerging markets ETF. And you can see we have nicely positive total gamma as reflected by this GEX intensity gauge. And if we look at the chart, we have this big positive GEX cluster at 45. So this 45 GEX cluster really stands out. So looking at that, the chart, as long as we hold 42.5, I'm looking to see that 45 area reached.
Yeah, that EEM is a name we haven't talked about much previously, but that looks really interesting. Thanks for sharing that, Sean. So next I want to talk about GLD. GLD is a name we've traded multiple times this year. We talked about this in our previous video a few days ago, how we were exiting our 230, 227 put credit spread, basically got max profit on that trade. And today we tagged the big dealer cluster at 240 and rejected, again, classic gamma exposure behavior. Dealers coming in, selling the underlying security to hedge their positions in positive gamma exposure environments. I think this can find a base around the 235 strike, which you can see here is the first major positive gamma exposure level here up the chain. And so I think a retracement just slightly back into this 235 zone will make a great entry point for another leg higher. You can see we've had a few legs coming up from the 225 range into the 230 range, and then again here in September all the way from 230 up into the 240 range. And so I'm looking for something similar to happen, bouncing off this 235, hopefully into the 245 range. What really has my attention though today is all of the volume that came in at the 250 strike. So this is something that we've seen in previous trading sessions. This is option volume for today, just to clarify. And what we've seen in previous sessions is big volume coming in at the 240, 245, and 250 strikes. So basically in this range right here. And so that just tells me that market participants are continuing to be bullish on GLD. They're continuing to come in at these higher prices. Now, that doesn't mean we're not going to see a dip like we saw this afternoon. But what it means is that those dips are potential buying opportunities for better risk reward setups, right? It's all about the risk reward trade-off. So what we're looking for is a move potentially into the October timeframe. It may take until November, but we're looking for a move into this 245 to 250 range. And so we're going to be looking in the options market in the October expiration and November expiration to try to find a good play that's going to allow us to generate some premium income as GLD trades higher. So if you guys are interested in continuing the conversation, head on over to our community Discord. I'll put a link in the description below. We're always talking about the trades that we're looking at each and every trading session. So come on in and say hi. We'd love to see you. Also, if you're interested in accessing our gamma exposure data and our option flow tools, head on over to geeksoffinance.com. You can get access and become a member. Our members also get access to our Geek University course, which is a 5-hour option strategy, gamma exposure, volatility, and teaches our overall trading approach. So definitely check that out when you get a chance. Thanks so much, everybody, for watching, and I'll see you guys in the next video.